The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach we go, dear friends. And take a quick look at the markets. We're off 4.5 points at, let's call it 1948 on the S&P cash. Volume is very light for pushing down lower again today. 1.9 billion shares as we start the show. And yesterday we spoke about options and the options rollover. And, of course, I want to thank John in the Den for bringing back up that it was the quarterly rollover for the not the S&Ps, but the ES. And there was a little bit of that in the last couple of days, I think, that had to do with additional volatility. Today, of course, this is kind of a repeat of last Friday, where you had very, very light volume going into the weekend, and you got yet another bounce. I expect that we probably have a nice bounce coming in on Monday morning if we don't get hit by a meteor. And I think at least one little problem has been put to the back burner, at least for a while. We'll get into that in news in just a few minutes. But and I see a ton of stocks coming back down, and some of them retesting lows 3, 4, 5 times. Each time the volume comes down a little bit, and more shorts are climbing on some of these individual stocks. And I'm going to take the opposite side of that, assuming that there's probably, if the market does go down, which I don't think it's going to, that there are going to be a lot of shorts covering every penny on the way down. If it goes up, there's going to be a huge squeeze. And I think that the faster of the two sides is going to be the squeeze side of it. And, all these stocks don't bottom in 5 minutes, but there are enough of them out here that are showing what a lot of people would think is weakness, but really is strength, and that is extremely light volume pushing down. I've got one stock that had about 5 million shares as it pushed down yesterday. It pushed a lot of shorts getting in. It pushed on it again today. So far, what do we have? 2 hours left on a Friday. 2.5 million to about the 5 million they had yesterday. So to me, that's lighter volume on push downs. And as I said in my newsletter this morning, it's been around for 100 years on the stock market. Be very wary of being short quiet markets. And I suspect we're going to have a very quiet market over the next 4 days as we go into that FOMC meeting. And generally, the thing is to just kind of stumble up into it. We talked about options expiration, and what at least option market makers have been doing is betting on some big-time upside. Now, it will be muted, and a lot of times they kind of meet in the center. But right now, they've basically been pushing the last 2 days for the SPYs to go up 10 points. Now, that doesn't mean that it goes up 10 points, but that's where it would be today. Now, as option premiums start to degrade, that can be more like 5 or 7 points as we get into expiration next Friday. But some rather large bets, and including this morning off the lows, when we were down about 1940 on the S&P cash, a lot of action that suggests they think that we are going to be much higher going into expiration next week. So we'll keep an eye on that. Right now, of course, we're hovering around this 1950 level on the S&P. In my morning newsletter, I said I thought we were going to expire right around not expire, but closed today, somewhere around 1955, and then I think we start stumbling up. I'm not exactly sure what it's going to be. Maybe the open on Monday, maybe some news Tuesday or Wednesday, but I think we're going to get up higher than the 1970, and that's where we're going to start seeing some squeezing. It's like Kami said, touch me, feel me, squeeze me. Anyway, I'm long some stocks that have some horrendously heavy short volume into it. Most of these are retail traders, and I know they are the quickest to vamoose and probably the most likely to create a short squeeze for me. It's kind of like an avalanche. You get that first little ball rolling down the hill, and it gathers more and more snow around it, and pretty soon you got a giant snowball and a nice little cascade effect. And I'll as I said earlier to one of my subscribers, it's time to start buying the dips and sell the rips. And I think it's going to be that way for a while. I'm not expecting some kind of massive run back up to the previous highs and 2100s on the S&P cash. In fact, I think we're probably going to have a very range-bound market all the way through the end of the year. I think we've seen most likely the lows, unless we see some more Pearl Harbors, at least financially, with China deciding they're going to devalue their currency. Didn't see it out there on the news, so I'm going to report it here today. We'll do that in just a few minutes. But I think those storm clouds are going to at least be out of the way for a while. We'll tell you why. But as always, it's time to get this party started.
That it's all just a little bit of history repeating.
Yeah, anyway. Other things going on out here, and that is the savings and loans crisis in 1988 worsens as the Financial Corporation of America, parent of the country's second largest savings and loan companies, files for Chapter 11. Of course, this went all the way in and was an overhang on the economy into 1992. Probably had a great deal to do with the presidential election in 1992. If the market would have probably turned 3 months earlier, my guess is that we would have had a different president, a two-term Bush won instead of a Clinton. It was that close. But the market pretty much had turned pretty much by the day that Clinton had made office, and we continued to go up pretty much into the dot-com bubble of 2000. Anyway, merge five more. They basically merged five more failing savings and loans. And, of course, 49 bailouts at a cost of $11 billion, which was a drop in the bucket compared to 2007, 2008. Of course, we never learn anything from history, and and do have to pay a horrible price because of it. I think there's several things going on that we could learn from history, but of course, no one wants to hear it. In fact, I've been reading a lot of books lately about Winston Churchill. And, you know, if there was any chance that we'd ever have a leader with as much forethought as him, he had to spend basically almost a biblical kind of story from history. That is, he went over in 1932 and saw what Hitler was all about. He came back, started telling everybody. Guess what? No one wanted to hear it. He was an evil man. He wanted war. He was bad. But the choice wasn't between war and no war. The choice was going to be between a smaller war or a much bigger one. And in the end, the price was about 70 million lives over the world. And if they would have probably done something when he started sounding the alarm in 1932, that number may have been 1/10, maybe 1/20th of what eventually ended up being probably the defining issue of the 20th century. But I don't know. I'm a big history fan, and I do believe that if you don't know your history, you are bound and probably cursed to repeat it. Other things going on. We talked about why I think at least a part of the cloud is over, and that is that 21 Pacific Rim economies, including the United States, China, and Japan, pledged Friday to avoid competitive devaluation of their currencies amid stuttering global growth, a joint statement said. And I think that probably puts one of these financial Pearl Harbors off the table, at least for the next 6 months. Of course, a month ago now, that's what really started the ball rolling for us out here, was the threat of competitive devaluations. Finance ministers from the Asia Pacific Economic, I can't even say stuff today, Asia Pacific Economic Cooperation Council made a commitment at the end of their 2-day meeting in central Philippine city of Cebu. Well, that's one place I've never been. I don't think I've been there. Been in the Philippines several times, never in Cebu. Of course, I didn't really spend a lot of time anywhere in Philippines is different. But I do digress. Restoration Hardware didn't look all that exciting after hours last night. It was trading around at $90. It's trading around 97 right now. But very interesting to see how comments made by the executive branch of Restoration Hardware moved this company today, and just what happens when you have some fairly decent comments out of a company that has fairly high short interest. I think this one had 7 days to cover, and pretty nice bounce from about the $90 range, which is where this thing was trading at right after the numbers came out. But they're looking good. Margins are good, and I don't know if housing or the housing business has as much to do with this company as others, maybe like Home Depot and Lowe's and actual home builders themselves. They seem to be, kind of the refitters, refitters to, let's say the Tiffany kind of refitters, right? They're selling very expensive stuff and doing a fairly good job at it, and margins continue and sales continue to grow. And even if housing pulls back, this may be one company that continues to do well. Got right up to, I think, $100 earlier today. But it's a kind of a shining bright spot in some rather poor news last night. And it is a mad market. Yep. What else do we have going on out here? Let's take a look at Zoomies, Z-U-M-Z. I think this was the stinker last night, still stinking this morning. And there's a handful of these stocks that are like this. Going into earnings last night, volume did increase, kind of closed at the lows, blew through the lows. But I'm not really surprised. We'll talk more about this company when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And if your kid is probably skipping school and on the slopes, motocrossing, or on a skateboard just smoking dope, he's probably been to Zoomies. This is the stock that we talked about before. It is kind of the active slacker store, as far as I can find. Anyway, it is down on significant volume. It's blown through the previous lows that you had even back on, what is that, the 5th of June. That day you had 4.5 million shares. You already have 5 million shares. So it's going to blow through that with a volume, and that will be it. So anyway, you've got just about everything that you're looking for out here. In a breakdown, let's see if we can go back. I thought, okay, we broke through the previous low of October 4th of 2011. I just don't know how far you have to go back on this one. I mean, this thing goes back to the lows of 2008 and 7 from here on. And I don't know. It's like a lot of the other stocks that I've been seeing, some of these retailers. I think I've got one in my list here today. Is it ARO? I think that's it. Aero Special. Talk about stocks and these retailers looking like they're going out of business. This one, interestingly, caught my attention from the scan because it had a high volume pop down on that August 28th move at 86 cents. Again, probably pretty close to death already, or the little EKG machines out there going beep, 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 beep. Anyway, went through it yesterday with a lower volume. You were looking for 7.7 million shares. Yesterday, it broke it with 1.8 million shares. Today, with 999,000 shares. Like I said, a lot of these stocks look like if you're in the mall, things have gotten from bad to worse. But not all the stocks out there. I mean, even we've talked about some of these stocks in the Chinese sector that don't look half bad, at least compared to previous lows. These are some of the ones that I think are going to reverse here, at least for a few days. March 10th on Qihu, which is Qihu. If you're trying to do this at home, be careful. I am a trained professional. March 10th, $44.56, 9.22 million shares. And, of course, we got about 1.5 million shares. Now, this thing has broken through those levels the last few days. 2.7 million shares, 2.4 million shares today, 1.5 million shares. A lot of these stocks look like they're getting rather washed out. And I think maybe we're going to have some more news for these things to break down any lower. I had a list of stocks out here that were kind of interesting. In energy, Western Refining has gotten kind of interesting. I'd been waiting for this thing to come back and hit this gap that runs from mid 45s to 47. That gap occurred on the 21st of, gap down actually, 21st of August. On some decent volume, 2.4 million shares. Got kind of into that candle yesterday with 1.7. A little doji out here today on light volume. But I would still suspect that if you're looking for some kind of downside in energy, it certainly would be in that $46 range that I would be looking. You probably have a pretty good model trained professional? No, a trained professional. Retracement expansions. That's what I'm looking for. Anyway, you've got a pretty good retrace. The one thing that I would look at this one with is, of course, that that gap comes at 618. We'll look at it in just a second. But right now, if this was the high yesterday, this would take you back to 3240, which is pretty close to the January 15th low in the stock. So Western, I'm watching this one kind of closely. We may have some kind of ABCs in energy setting up, at least in some of these. I wanted to go back to just the retracement to show you this. But when we go back and look at the 618 of this move from the high back down to the high, you basically go back to the, what is that, $46.23 for 618, and that takes you right back into this gap. And I think your odds would be much higher if you're looking for some of these out here to not only look at the retracement levels, but see what the gaps are and the volumes are. But my guess is that as the market moves slightly higher into next week's FOMC meeting, that we are going to be looking at some of these gaps getting filled. That's one of the ones I'll be watching and how it gets filled on it. When we come back, we're going to go cruising. We're going to get on the Love Boat and take a look at Royal Caribbean. Have you looked at this thing? There are some stocks up here at highs, folks. Not many, but RCL is one. We'll get out Captain Stubing when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, taking Captain Stubing on the Love Boat. That was kind of interesting, I guess, as a TV show. But never was that great, right? Just kind of okay. Just nothing better on Saturday night, especially if you're a kid. You don't have your own car. You can't go anywhere. Well, anyway, just got to see all those horrible old actors like Red Buttons. I always wondered why he was supposedly famous. Didn't ever seem any good to me. Anyway, Royal Caribbean, it has tested its high out here. When we go back to the August 10th high, 3 million shares, $92.68. It has gone above it. That did it with 2.2 million shares. Just kind of sideways, though, since then. You kind of like these things to kind of pull back fairly dramatically back in. Kind of lighter volume out here today. Now, what is kind of very interesting is this huge move off that August 24th low, and it had energy, much more than it had on the way down, which may give you a good indication why it's still taking a run at the $92 level. Now, there is one bit of statistics that is better than just about anything else out there, and that is stocks that hit 90 bucks. Back off anything dramatically, have like an 80 or 90% chance of hitting 100. And I suspect that when we dig back into these, it has a great deal to do with why everything is 98 cents or 99 cents at the store. And that is, once you get to that level, at least humans, maybe Americans, just don't see a lot of difference between 90 bucks and 100 bucks. And that's it. But one of the best statistical edges is if a stock hits 90 bucks, it's going to go to 100. So not a bad bet out there. Engineer saying the $6 million man was better. I can't remember anything on that show that made me feel any better about it. You know, most of those shows were just pretty bad. I actually liked his show where he was the private eye slash, what was he, like a, some kind of stunt double or something. Yeah. Anyway, there was a little blonde in that. I was just annoyed. Not annoyed. I was in love. Anyway, we looked at Q, who was getting into some other things. Before I digress farther, Toma. Yeah, that was a ripoff of. Toma was a ripoff of a movie. Okay, what else do we have out here? Let's take a look at it. Wanted to look and see how gold was doing out here today. Again, we've been talking about these gold stocks with light volume out here and how they should be reacting. Actually, you don't have a bad signal out here on gold. And maybe there is some kind of at least respite out here in the gold stocks. We'll see on Monday. But I didn't like the way gold itself is moving, but some of these stocks are starting to act like maybe there's a sign of life in some of these. Gold Corp, when I look at the July 24th low that had 21 million shares at $12.35, we pierced through that today. We've closed back into that trading range, and we've done so on half the volume. Now, the downside is how much upside is there in these stocks, and that's why I probably wouldn't bite on this one. There just doesn't seem to be a lot. Confluence comes in at what's $13.62, something like that. Pretty good Confluence. So you should see strong resistance at about $1. You know, maybe that's enough for you, but to me, it is not quite enough. Maybe $1.50. I'd like a lot more meat on the bone. I like eating ribs, but I like eating ribs that have some meat on them, not just a little touch before you hit the bone. And unfortunately, that's where the setup on these, or a few of these gold stocks, don't seem to have a lot of risk reward on them. They do look like they've kind of moved down. What I would like for this to do is probably come out here and base out for a while and continue to show that there's this $12 level is some sort of support. Similarly, the GDX out here has a similar kind of thing, except you've got a lot more volume, of course, on it on the August 26th low. So we'll use that one, which is $12.96 with 100 million shares that day. Okay, we got into it with 18 million shares today. It's closed back into the trading range. But again, your confluence levels are not going to be that much higher. And that means that you're probably going to have more of a consolidation out of this. And all I've ever asked for is a nice consolidation in gold. And a lot of people just getting away from it so that I can buy these things at the lows. Far too much attention in these. But again, like I said, when you go back and look at these confluence levels, there's some pretty strong ones. This one's right at $13.07 to, what is that? 13.72. A little wider than some of these other ones, but again, you get about $1 higher, and you're going to find some fairly stiff resistance in these. And I want a little bit more than 10% upside on my gold trade, but you know, maybe they blow right through those. I was talking to Andy Heck yesterday about prices of meat, and that I'd been back into Buffalo Wild Wings. I hadn't been in a while. They had redone the store and also had really started to work on putting together nights where a lot of people would show up. I just happened to go in on Tuesday night. Of course, that's their half-price wing night, which almost makes it affordable. But anyway, just if you spend $15, I can go get a steak dinner for $15. That's very good. So eating 12 wings with a little bit of ranch for $15 doesn't sound like such a great deal to me. But if you want to go there for the big screen televisions, that kind of stuff, interesting. But the thing I saw was, just as I was getting ready to leave, is all the people they had coming into this place for the fantasy sports night. I don't know if it's always on Tuesday. I suspect maybe it is. It'd probably be a good thing for them to do. But they had maybe 80 people showing up for this sports night. And I assume that they're doing this all over the country. I know how big those fantasy sports gambling sites are. They say it's not gambling because it's it's kind of like the stock market. It's, got some skill involved in it. But, this thing tried to bounce through the previous high. Volume was down a little bit, about 100,000 shares. But not really backing off here with any kind of volume. And I'd be very reticent to be shorting Buffalo Wild Wings during football season. And maybe they've come up with something, and that is getting all these people that are in these fantasy sports leagues into their places. Now, I'll check out a couple other ones over the next couple of weeks if I get a chance, but maybe we'll have callers also calling in and telling me about maybe their anecdotal evidence for Buffalo Wild Wings. But normally I'd probably short this thing. I just think that until probably Final Four, generally not a good time to short these things. Right after the Final Four generally is where you find all your weakness through the summer until football season starts again. Just looking through a few things. Umbrella. The thing has taken a huge beating. And again, one of these stocks that I never could find shares to short on it, and the options were ridiculously high. I think you could have been totally right and still lost money on options from Umbrella. But if you didn't get them just perfect, I think you probably still have it. Again, we've been talking about some of these setups where you've got confluence level setting back up. And as we move, I suspect move higher over the next week, some of these are going to start moving up. Maybe if this thing goes sideways for a while, enough shorts will get off its back that I'll have an opportunity to take a swing at it. But what we have is a nice confluence level on this one. It kind of broke through the previous levels with lighter volume. $71 on August 24th, where it spiked down. It has gone through it. 2 days ago, we had 3 million shares. Yesterday, 2.5. Today, 4 million shares. Now, if this would close back in $71, you probably have a case to make that it would go up to the confluence level at $85.67 to, what is that? $88? Yeah, something like that. So about a $2 range. Now, you've got some big gaps in there. Those gaps came down on 10.7 million shares. But I suspect if you were looking and could get shares short again, that you're probably looking right in that level of the $88 to pull the trigger. And again, a lot of these stocks, massively heavy short interest in it. That's like a $20 move in this thing off the low today. So it's not chicken feed, but with massive short selling. In fact, what did we say on Restoration Hardware? I think it had 7 days to cover, if I remember from last night when I looked. My guess is this thing's probably 10 days to cover or 12 days to cover. I think we get short data actually tonight, and I'll be looking at it. I think it actually comes out today, and it gets published either Monday or Tuesday. I think maybe Tuesday. At that day, you probably want to make sure and know the short interest on every stock that you're taking a look at for either up or downside, because there are a lot of people that piled on a lot of these stocks. And if we get any kind of movement to the upside, you can see all of the $20 and maybe something like Umbrella happen in a day or two. Just from the short covering, no change in fundamentals, no change in long-term outlook. But we're seeing a lot of games being played these days by the operators on in the markets. And I would not be surprised that this is one that they will take people to the cleaners on. You can give me a call at 877-927-6648. That's 927-887. Why am I having problems the last 2 days with this phone number? I've never had problems with it. 877-927-6648. The reason is I slowed it down. I can say it fast. I can't say it slow. Anyway, you can also email me at path@tfnn.com, and you can post a message in the den. But we shall take a look at it. What else do we have? Aaron's. I've been watching this stock very interestingly, too. If the market was going to be pulling back, I was looking for this to break out with volume. Aaron's has had this $39 level from July 24th as the key number where this thing basically blew apart down fairly significantly, about $5-6. That happened on 2.4 million shares. Tried to get through it on August 18th with 600,000 shares. Came back and went down further, of course, to that August 24th low, only to rip all the way back up higher. But yesterday, 500,000 shares and back into the trading range. Now, if you are bearish, I would suspect that you would be probably looking at long, maybe Aaron's. It is, if you're not familiar with them, one that rents televisions and dry and cleaner, washing machines and dishwashers and all that kind of stuff. You've got, if you and then I turn fairly bearish, my guess is that you're going to see this back down around that $35 level on light, if not infinitesimally light volume. And maybe that's the next setup for a next leg down if we're going to get one. As I said before, I'm looking for a kind of bigger trading range, and I am neither long nor short indexes, more than what I play during the day occasionally, which I'm doing now, buying in the morning and selling at the close. Seems to be making some good money this week anyway. So we are looking at this, but I think this may be one of those canary in the coal mine stocks that we continue to look at. GCGN? GGN? Gaboli Gold Natural Resources Income Fund. I don't know much about this one. The chart did come in front of me, though. And again, when we're looking at some of these gold stocks, doesn't look all that bad. I don't know a lot about what's underneath it. I know who Gabelli is. Gold Natural Resources Income Trust. GGN is the symbol on this one. Maybe I'll ask Tom about it today, what exactly it is. I'd have to dig into it. Chart doesn't look that bad. In fact, if I was looking at buying a chart, this one would not be off my radar. It doesn't look good. Now, again, a lot of these stocks have set up just this way only to blow up the next day. I wouldn't be buying it today, but maybe Monday. This looks interesting. Or blows through the bottom. Hard to tell right now. Anyway, we'll be back in a minute. Give me a call. Oh, got somebody on the phone here. We'll be back with John and Philly in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We're going to go to John in Philly. How you doing today, John?
Very good, David. Thanks for taking the call. David, I wanted to ask you about two subjects. One, semiconductors and Micron, and second, biotech. First, I should just reiterate for the benefit of your listeners how well you did for your clients in shorting Seagate and Western Digital months ago, and then shorting with put options Biogen IDEC. Anyway, to the first question on Micron and semiconductors, I read this past week how Samsung is spending like $23 billion to build out a new fab for product lines that weren't specifically specified. And I also note, and you had reported on this in the Tech Insider, the Intel-Micron joint venture with latest in NAND memory technology. My question on that, is there a way to play that through intermediate-term investments in some semiconductor name, be it Micron, Samsung, Intel, as we move ahead?
Well, there's two different things that we're talking about. One is a new form of cheaper NAND memory, and the other one, which is I think the big moneymaker long term, which is of course the what they call the MEM resistor technology, basically replacing transistors with a 2-wire device instead of a 3-wire device like a transistor. So there are basically two things moving forward. But the thing that I'm looking at in Micron would be probably around the first of the year. I suspect that we will see probably some kind of bottom in traditional memory. And also at the same time, they're going to start, I think they're going to start shipping in February this new technology memory.
Yes.
Along with Intel. And that's where I think probably the curve is going to turn back up for Micron. So I don't see anything in the next 3 to 6 months other than these things basing out before they start getting the new product and finding a customer for it and pushing it. So, you know.
I appreciate that. In your judgment, would Micron be the way to play that trend as compared to some other name?
It's probably the purest play.
Got it.
I mean, you know, you're going to look at basically 3 companies right now that are really into this, the new HP, Micron, and Intel. And Intel, you know, each one of those, of course, comes with a lot of baggage other than Micron, which is only makes memory, right?
Right.
So I think it will probably be a longer-term story than Intel. Intel's planning on using it in its own chips, right? So it's not going to be as easy to define as that. They're just going to be making these chips with bigger margin. So Intel probably will get a taste of it, but Micron's just physically going to make memory, and I don't know how fast they're going to get it going. But I mean, everything that they said about it makes me think that it's going to be a huge deal. It's going to be a huge deal at the high end for Intel. I think at the medium and lower end, it's going to be a big deal for Micron. And for HP, it's going to be the enterprise, because they're basically trying to sell these big systems back into enterprise. And, you know, that's kind of it. Those are the 3 that I'm looking at. The question is, can HP get it going fast enough? Intel, I think, is a shoe-in. It just makes higher margin for the product. Hey, we're out of here. We'll see you in Tom O'Brien's show. In the 4 o'clock hour, we'll have Andy Heck in there. We'll be talking about 9/11 with him in the first segment, and Apple, probably the rest of the show with Tom O'Brien. See you later.
The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out.
You're watching Tiger TV.